Have I missed the boat? Is this the best time to invest? I have been asked this question by so many people in the community. Right now seems that the US market has already recovered back to its high, and there are a lot of people thinking, have I already missed the boat? And the common problems that we have been seeing now is that a lot of people are afraid. They are afraid that, am I buying at a very high price right now? Will the market drop from the high again? Will that be a double dip? So there are so many uncertainties out there, and people are afraid to pull the trigger to just start investing. So if you have already invested since when the market corrected during March, and as of now, you should have already made quite a good amount on your investments. But right now, it's still not too late to invest. And let me show you why. So here are 4 facts that I have found that I will share with you in terms of the market. So this is actually the S&P 500 chart that we have seen till the latest date. This is 12th June. So as you can see from in terms of the 1980s, 1970s till now, the S&P 500, right, it has a very good trend. Basically, the whole trend is that it's rising upwards. So if today we want to predict that when is the highest right now in the market, right? If we are thinking about in the year, maybe in terms of the 1990s, so it might be you reach before the year 2000 point, you have thought that, oh, maybe 1200 points is already the highest at S&P 500, so you actually stop investing. So when you stop investing, you will notice that the market actually even trend higher. So even when it hits the crisis of the year 2000 and market actually starts to dip, subsequent itself, right, market actually start to recover again. And of course, when it hit the 2008 crisis, right, market starts to dip, but with the quantitative easing that the governments are doing, with all the money that they are pumping into the economy, and with the lowering of interest rate, you have seen that this hyperinflation managed to get the S&P 500 go into another crazy rally, which is until the recent 2020, and then the COVID situation causes the market to correct, to have the dip, and then the rebound. So if you are looking at this S&P 500 chart, you will have noticed that there isn't a way to predict when is the highest, because in terms of market, it always tend to go up in the long run, and that is actually due to a few reasons. The first reason is that the population growth of the world can only increase. So when there's a higher population, what does it really mean for the businesses? It does means that they have more consumers and there are more customers to be sold to. So you tend to see increase in business. Second thing is productivity. With an increase in productivity, companies can make more money, because if they are more productive, there are things that they can do with less resources, with better results. So that itself will affect the bottom line, which means that they will actually have a higher bottom line in the long run. So ultimately, what you're looking in terms of this chart, right, you should be actually looking even way higher than this. That means more of a long-term upward trend. So if you're investing in the long run, ultimately the market is always in your favor, because history has already shown that the market tend to rise in the long run. The second point, it is almost impossible to predict anything. Like, how can anybody predict that there will be a pandemic of this COVID-19 situation happening in the world? So if you are afraid of investing because of the unknowns, trust me, there are so many unknowns out there in the market that we wouldn't be able to predict and forecast everything. But if you know that the market tends to go up in the long run, the best way for you is to get started as early as possible, instead of predicting when will be the next dip in the market. And I am going to share with you this article that I found online. So this article shows that the third point that I want to cover, market timing doesn't work. And there's actually more evidence that why it doesn't work. Because ultimately, if we just go back to the fundamental, is that we can't predict how the market will move in the short run, but we will know how the market will move in the long run. So if you take a look at this, basically in terms of this pandemic situation and the stock market performance from the 1980s till the recent time. So ultimately, there are so many crises that we have seen before in terms of SARS, the avian flu, H1N1, the recent Zika, and the COVID-19 is the latest one. So the following 6 month return after the crisis, market actually went up, because when the recovery comes, right, it comes in fast. And if we look at this, right, is let's say after 1 year in terms of crisis, 3 years and 5 years after the crisis, what is actually the performance of the S&P 500 index? So after the 1987 market crash, you would have seen that the annualized return 1 year after the crisis is 15%, 3 years is 9, 5 years after that is 14. And the Lehman Brothers bankruptcy, which happened in the 2008, subsequent 1 year return is negative 6, then 1.29, then 10% annualized return. So Brexit, this is even crazier because 17% annualized return 3 years after the Brexit is about 14% per annum per year. And the 2018 market correction, after 1 year, market actually went up by 16%. And if you have looked at the problem of timing the market, right, is that, let's say for example, if you have invested in the 20 years track record in the S&P 500 US index, 10,000 invested in the US market, if you participated in the full 5,000 days, right, your annualized return is actually 6%. But if you actually miss 5 days of the biggest gain, you will actually have an annualized return of only 3.87%. And if you miss actually 10 days, 2.42, you miss 20 days of the biggest gain, 0.07% is your annualized return. And if you miss 40 days of the biggest gain, right, in the S&P 500, investing over a period of 20 years, your overall return will be negative 3.79%. So as you can see in terms of today's market, the fall and the rebound of the market is so fast that some people might have already missed out to the opportunities from investing since the March period till June. But if you continue to stay out of the market itself, right, it's ultimately very challenging for you to participate when there's actually an exponential growth. We don't really have a crystal ball to tell us how the market will move, but like what I mentioned earlier, if you believe in the long run that the market tend to go upwards, then you might not have to keep thinking about when is the best time to invest in the market. Don't invest in a single company, go through a broad-based fund or through an index like this. You'll be able to participate in the performance of the overall market, which is more important. So let me share with you another point, and this is the point that shows that market have always rewarded discipline. So if you have invested since 1970s till the 2019, you would have seen that all the crises that happens over here, the Y2K, the 911, the dot-com crisis, the 2008 subprime crisis, Brexit, Eurozone debt crisis. Irregardless, with so many crises along the years, you would have seen that the overall world stock index always goes on the upward trend. So we have already enough and sufficient proof and evidence to prove that market always goes up in the long run. But in the short run, nobody can ever predict how the market will move. So if you are worried about investing, it might be due to the fact that your time horizon a very short horizon. So if you have a very short time horizon to invest, things might seems very uncertain to you. And that might also means that most likely you need the funds for other needs, and investing might not be the thing that you want to start off with. But of course, if you have excess funds that you want to invest and you're able to set it aside for the long run, this chart gives me a lot of confidence to go into the market even at this current point of time. And lastly, let me show you something very interesting. So if today you are invested in the US overall market, which is the S&P 500, let us play with this calculator. So assuming the starting year is 2010, and we have invested until 2020, so June to June. So let's say maybe 30 years ago, there's not a lot of money that you can actually invest in, and you actually started to invest in $10,000 monthly itself. Let's say we are able to save about 200 every single month. All right, so we keep it constant by consistently investing 200 a month. So let's calculate. So you would have seen that your annualized return is actually about 12.29% every single year. So if you have already saved about 34,000 itself, your final value of your portfolio is actually about 77,000. So your funds actually already doubled. It doesn't necessarily mean that you can only save 200 a month. When you have just started your career, your income might not be high. So that might be the most that you can afford. But along the years, right, imagine if you have increased this monthly investment every single year by a certain percentage, this amount can snowball. So rather than you actually just putting your money in your savings account, if you have already started investing, these are the type of returns that you are able to see in the long run. So if you have asked me, Vincent, is this the best time to invest right now? In summary, yes. I think right now, even with the market is coming back to the all-time high, I believe that it is still a good time for you to start investing. It might not be putting a lump sum in, but a better way of doing it itself is that you can invest through dollar cost averaging, so investing every single month. So you create a system that when the prices are expensive, you buy it lesser, when the prices are cheap, you buy more. Set up a system to start investing regularly. And secondly, have a longer time horizon for your investments. Because if you are able to invest for at least 10, 15, 20 or 30 years, you don't have to worry too much about the market volatility. In the midst, these are all noises. In the long run, we will be looking at profits. And the third point, don't keep thinking and worrying about where the market will go, because trust me, you will never be able to guess where it will be going. Just know that in the long run, if it does benefit you and if you have the horizon to be invested in it, just go ahead and start planting seeds. I hope today's video gave you the confidence to start investing, and I hope you enjoyed this video. And if you like this video, do help me to press the thumbs up button and subscribe to my channel so that you can receive upcoming notifications when new videos are published. So thank you once again, and I look forward to talking to you in the next video.